Now, Bitcoin boasts the biggest market cap among cryptocurrencies today at around $1 trillion, but our next guest sees even greater potential in its chief rival, Ethereum. Brian Mossoff is the CEO of Ether Capital, a firm that offers investors exposure to the crypto and the technology and services building out Ethereum ecosystem and the vision of Web.3, or Web3 rather. Now, you're looking at his bio board here. He's a longtime entrepreneur in blockchain and crypto, angel investor as well, an expert on Web3 technologies, decentralization, and peer-to-peer models. He's been investing in Ethereum projects since around 2013. He also invests in other cryptos such as Bitcoin. He says he's a big bull on Bitcoin, but we're going to talk primarily today about Ether and Ether Capital. Here he is now. Hi, Brian. How are you? Good to see you.
Good to see you guys. Happy to be here. Thanks for having me.
So, Brian, I was interested to hear that you used to go to those coffee meetups that were run by Vitalik Buterin, the creator of Ethereum, way back in, let's call it 2011, 2012, and then you got into it seriously around 2015. So you've seen the evolution of this decentralized blockchain system. You've got something like, not you personally, but there are something like 250 million developers coming up with all kinds of applications to run on top of Ethereum. So what would you say, as you've seen this evolution, what are the one or two main things that make Ethereum really the de facto standard now?
So I think it's helpful to frame that in the concept of, in why it's different than Bitcoin. And the big takeaway here is that Bitcoin, which is great, it's the first cryptocurrency, it goes live January 3, 2009, doesn't have a functional programming language at that base layer. And there were copycats of Bitcoin that came along after it. Litecoin, Purecoin, Feathercoin, Dogecoin is having its day in the sun this week. And it wasn't really until Ethereum came around and said, well, what if we make that base layer much more functional and flexible, and we put a very rich programming language, and we borrow this idea of a blockchain that came out of Bitcoin, but we make more of like an operating system that developers can piggyback off one another and put that out into the world. And that's what got, I think, everyone really excited about the proposal of Ethereum, because nothing like that had ever been done before. It's referred to as a smart contract platform. And what you have now is a number of developers who aren't able to build on Bitcoin. It's not to say that, there's anything wrong with Bitcoin, but it has a different value proposition. And what Ethereum offers is the opportunity for those developers to experiment and build decentralized finance, on-chain lending, the NFT movement, tokenized art that's transferable or saleable to anyone in the world. You can do tokenized dollars for settlement, which is what Visa is testing now. And this is really exciting because what you have is this politically neutral open system that anyone can plug into and build off. And that, I think, is what everyone's really rallying around with Ethereum specifically.
Brian, Bitcoin's limited to 21 million coins. Ethereum, I think, is not necessarily limited, but and it can grow. So, from a market valuation perspective, if the supply is unlimited theoretically, what stops or what makes Ethereum appreciate in value as it becomes more adopted? I know there's a proof of work, so to speak, but what's going to be the driver of the price of Ethereum?
So you're right in that, Bitcoin, we do know what the max cap will be by the year 2140. We'll have 21 million Bitcoin mined. Ethereum currently doesn't have a supply cap, but there are some really interesting parts to the monetary policy. One of them being a proposal right now called EIP 1559, which says that the transaction fees on the network would actually be taken out of the supply. And so it's possible that the monetary policy is going to shift in a big way in the upcoming months in terms of how to value the asset. It's really tricky. What people are buying it for is, of course, one, speculation. They believe that the price is going to go up, but then also people need to use this network. So people, you have a subset of users, let's say, who want to do something like purchasing NFTs. They're all paying transaction fees denominated in Ether. So no matter what the type of activity that they want to perform on the network, they have to have some Ether and they have to spend that. And so the reason you want to own Ether is because it is still limited. It's not unlimited per block or per 5 minutes that you can just get as much as you want. It's similar, to gold here, where you could also say that we'll just continue to find ways to mine gold. And so how do you assign a price to it if we can't put an absolute cap on it? I don't think that that's really that important here. I think the the big question is, what is the demand for this network? And what we've seen is an astronomical growth in the demand on the Ethereum network. It's on track to clear over $1.5 trillion in the first quarter of 2021. And these are just mind-blowing numbers compared to how small this network and this experiment basically was just 5 years ago. And so we kind of think of it at Ether Capital as a toll road, and everyone wants to get their transactions secured, whether, again, it's art or it's a tokenized dollar by Visa. Everyone needs to get their car onto this toll road, and they have to pay a little transaction fee. And there's demand for those access to Ether to pay those transaction fees to make sure that that activity gets secured on this open ledger.
Right. And just one last question, Brian. You've mentioned, and I'm interested in the business case of how Ether Capital is going to make money. Could you just briefly explain how you're going to make this? You've talked about making 16% on your Ether coins, so to speak. Could you just explain briefly how Ether Capital makes money being involved in this system?
Sure. And so Ether Capital, we believe in Ether, the native token on the Ethereum blockchain, definitely as a core asset. We hold a very large position in Ether. But one of the interesting things about Ether Capital is that we are not set up as a closed fund or an ETF, and that gives us a lot of flexibility in the structure to take advantage of things that we're seeing, whether they're different ecosystem bets. We do hold, different tokens outside of just Ether that we do believe make up core infrastructure of what's going to form Web3. We can invest in traditional businesses. We own a piece of a company called Wire that is back-end compliance and payment channels into this new world. And then we can also take advantage of generating a yield, that opportunity in what's called staking, by locking up our Ether effectively with into a bond with the Ethereum protocol. And as the validation mechanism changes over this transition in the next 12 months, being a large holder of Ether allows us to generate this big yield off that balance. So currently it sits at around 8% is what you can get. And so ultimately, Ether Capital is it's an opportunist investor who's focused on Web3 and Ethereum focused infrastructure and technology, whether that's a token or a traditional business. We have a structure that allows us to bring that to the capital markets.
Now, Brian, you mentioned Wire. This is a crypto exchange, and you said, or they've said, they want to be the Stripe or Shopify of crypto. A lot of companies say they want to be the something of something. So what's the key differentiator there? There must be a lot of companies doing similar things.
Sort of. So the something of something here is, we've always believed that the bet you want to make is on developers. I've always thought personally, outside of Ether Capital, and now that I'm at the helm of ETHCap, you want to make a bet on developers. You want to invest in and around the things that they're excited about, the things that they're building, or in the space they'd called it biddling. And so what Wire's doing is basically that same bet. It's not an exchange that is facing retail. On the surface, you don't sign up and then see a traditional user interface like many of the other popular exchanges. Instead, it allows people building these native applications that live on the blockchain to easily give an access point to someone who wants to get $500 or $1,000 into their wallet. They can just use Wire to power the backend in a compliant way. And one of their biggest components or partners is MetaMask. MetaMask has millions of active users. It's the biggest browser extension wallet by a long shot. And when you click the buy crypto button inside of that wallet, the thing that's powering that is Wire. And so we said, if we believe that there is going to be this new economy, there's going to be all this interesting developer activity, well then how do we make that on-ramp seamless, clean, accessible, and bring that to our investor base?
Thanks for your time, Brian. We'll chat to you again.
Thanks, Brian.
Guys, for having me.
Brian Mossoff is the CEO of Ether Capital. So are you even more enthusiastic about Ethereum now, after having heard that?
As I was reading through the financial statements and the business plan of Ether Capital, and it's interesting that Sam Seif, who's obviously a bright guy, I think he's the chairman of Ether Capital.
He is.
I think Ethereum is the place to be focusing from a business composition perspective. I think also what's interesting about Ether Capital is it's kind of like a private equity investor in these other kinds of businesses, and he sort of got into it a little bit with these two investments that they've made, and I think that's one of the real things that makes, I think, Ether Capital a very interesting investment opportunity.